morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at how the equity market has fared for the 9 months so far of the year in 2017. Has the lackluster economy been reflected in equity valuations? Let's take a closer look. And for the year so far, as at September 30th, 2017, the markets have been somewhat mixed, and here we can see overall the Trinidad and Tobago Composite Index, which includes both cross-listed and locally listed stocks, has increased just around 2.7%, as we can see by the yellow line. The All Trinidad and Tobago Index has declined some 2.8%, as indicated by the blue line, whereas the cross-listed stock index has advanced some 20.5%. Now, some investors may be asking, well, with a 20.5% increase in the cross-listed index, how come the Trinidad and Tobago Composite Index advanced just 2.7%? And there's a very good reason for that. The cross-listed index accounts for just around 28% of the total value of the composite index. In terms of overall activity in the market, we see that there has been some decline. Value traded off stocks, including mutual funds, would have declined to just around $863 million for the 9-month period of 2017, around a 4% decline from the $893 million, which would have been traded in the same period of 2016. Values traded also declined just around 17% from 80.5 million shares to just around 66.7 million shares. Performance of the cross-listed stocks, well, overall the index would have advanced some 20% odd, and this would have been driven primarily by a very sharp advance in NCBFG, formerly NCBG, which would have advanced 75% year to date. Also advancing strongly was JMMB Group Limited, as well as Scotia Investments Jamaica Limited. And just a note for investors, Scotia Investments Jamaica Limited is guarded to be taken private and delisted in the very near future. In terms of the All T&T performance, there was, again, as mentioned before, a mixed bag. Despite an overall decline of 2.8%, there were some notable advances. Guardian Holdings Limited, for example, would have advanced around 18.6% as at September 30th, as well as LG Williams B shares, which would have advanced around 18%, and Agostini, which would also have been up around 17%. NGL also came in with a commendable 9.5% increase as at September 30th, followed by Plipdeco 8.1%. On the decline side, we would have noted that there was some significant declines. One Caribbean Media, which is down just around 28% as at September 30th. NFM, which has declined around 20%. And Unilever Caribbean, which is also down around 17.5%. So what's driving the valuations, particularly in the local market? Well, there are a couple of factors. And what is expected to drive values going forward as well in the short term are a couple of factors, including lower earnings, which will come under pressure by lower consumer demand, higher taxation, and generally a more challenging operating environment where access to foreign currency may pose some challenges to maintaining operating margins for a lot of companies. This will obviously lead to lower investor confidence, and it should, in some cases, lead to lower share prices. On the positive note, which will be supportive of the stock market and valuations, there is stock liquidity, or the lack thereof, where some stocks, because they are thinly traded, will receive some price support even through these challenging times where earnings may take some temporary dip. A lack of alternative opportunities is also another area which will be supportive of the stock market, where many investors now are focusing on dividend yield in the stock market, particularly stable dividend yield in stocks, as a way to earn something that's more attractive than maybe investing for a very long period in the fixed income markets. And of course, dividend preservation, where investors may be favoring stocks with low dividend payout ratios who may have the ability to preserve their dividends even though earnings are falling. So how then should an investor position their stock portfolio in these conditions? Well, there are a few things that you should consider, but overall value remains the name of the game. And that means focusing on stocks with a lower valuations, including lower price to earnings multiples, higher dividend yields, lower dividend payout ratios, as we mentioned, which will facilitate dividend preservation in particularly challenging times, and In some instances, lower economic exposure to Trinidad and Tobago. And finally, those stocks which pay a US dollar dividend or generate their earnings in US dollars. So a couple things to keep note of as we enter the final quarter of the year in terms of positioning your stock portfolio. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. And of course, as we celebrate the Festival of Lights on Wednesday, I take this opportunity on behalf of the Bourse team to wish the entire nation a very happy Diwali. That's it for this week's edition. Have yourselves a great investing week. This has been the Bourse Report.